Okay, hello everybody, and welcome back to another entry in the Investor Diary. Um, okay, in the past two videos, we talked about how to identify a trading range and the role of inducement in identifying the range. So, part of the first part of the system, of course, is to identify the trading range so that we know what we want to do. Now, this is the GBP USD. We've done this chart before. We are on the 15 minute. Although what I trade currently on the 4 hour and the 1 hour. This is about to change because of the testing. I will talk about that in future videos. But now let's stick to the theory. Okay, so now we have this is the top of the range. This is the bottom of the range. How did we identify the bottom of the range? One, this is a change of character. So it was an upward trend, and then it went down, broke this low, or even if it was this low, it got broken here. So it's a change of character. So in a change of character scenario, the and in this case, of course, moving from an upward sentiment or bullish sentiment to a bearish sentiment. So in this case, the high stays the same, and now we are looking for the low. How did we identify this low? Is by we set the other limit of the trading range is identified when the inducement is crossed. Okay, and let's check that out if it is crossed or not. So this is the inducement is the pullback before the lowest low. So this is the lowest low, and this is the valid pullback. We don't see any valid pullback after this for this particular low. This pullback is not valid in this case because the low was not broken. So we need a lower low. Okay. And until the inducement is hit, if this went below, we only move the inducement. We don't say that it's a break of structure, okay, or change of character if the case was. So now let's check if this is actually an inducement that has been hit, and therefore this is a true low of the range. So we're looking now at this high number. Okay, for this candle, the high is 25.67.8, 25.67.7, 25.67.7, 27.7, and it's 8. Okay, so now we can clearly see that it has been hit. Therefore, and let's change the color of the inducement so as not to mix it with the trading range. So now this is a low. This low has been hit by this candle. So we have another trading range. Now this is a break of structure. In the break of structure, we look to identify, and we are going down. So we are still in a bearish scenario. So in this case, since it is not a change of character and we're moving in the same direction as the previous as the previous range, so how do we identify the high of the range? We look at the deepest retracement. Okay, so this is the deepest retracement from the low that has been identified by the hit, okay, until the range was broken. So this is, oops, so this is the high, and now we have a new range high, which is 25.69. Okay, 25.69. And let's change the color. Now let's remove this for later. Okay, what we want now is to identify the low. Okay, currently with this scenario here, where is the lowest low in these candles? Okay, so this is at 25.052, 054, 053, 0. So this is the lowest. Since this is the lowest, see, this is a pullback, but it's not for the lowest low. We need a pullback for this low, and no, this is not a pullback. Now this is a pullback. Why this is not a pullback? We can see this green candle here. Yes, it went down. This did not break this high. Okay. And even if it did, they're all engulfed in this candle. So even if this candle went up, we will not consider it a valid pullback, because all this movement is engulfed in this candle. So there is no real pullback. Okay. So now this is the pullback. Where is the high? The high is 25.53.9, 53.9. Okay, so we need this inducement to be hit, or we have another low and another inducement. So let's start playing. So in this video, and remember that we are going, because we are dealing with a free backtesting software, which is called Traders Casa, and in the first part of this, let's call it series, we might be interrupted by ads. So let's move it faster. Okay. Because it's a free version, and if anybody wants the link to this, it's in the first part, where the title is "What is a forex trading plan that I'm testing," and number one is identifying trading range. You can find well, actually, the backtesting, I link to it in every video and in every blog post that I mention it in. So you can find it. I will also link to it in this video. The guy with the origin of this methodology, I only linked to him, to his channel, in the first video only, and in the video with the subsection identifying trading range. Okay, this is minute by minute. Okay, so okay, it seems to be going up to hit the inducement. It's not going to oh, it produced another low. So now the next pullback, the nearest pullback to this new low is this one. Okay, so let's see. It's 25.33.9, and let's continue. Let's see here. Do we have a pullback? No, we don't have a pullback. Okay. Yes, now we have a pullback here. Okay. What is this? Now, in this video, the objective of this video, I should have mentioned that in the beginning, we will identify the points of interest, the POIs, which are the potential areas of entry. So now this is 24.91.6, 24.91.6. But we're going back just, this is another inducement here. Which is at 24.56.8. And we have the latest pullback is this one. Why this one and not this one? Because all this movement, 1, 2, 3, is engulfed in this candle. So this is not a valid pullback. They're all engulfed in this candle. So this is the pullback. This candle broke the low of the previous candle, and then this broke the high of this candle. So this is a pullback. The other ones are just within this engulfed candle. They did not. This is only a move within this candle. So what is this high? 24.13.1. Okay. So in this video now we have this advertising. And the issue is that they never show an actual ad. It's just an interruption. So as you can see here, and if you want to get rid of those ads, you can get the basic plan, which I think somewhere between $3 to $5. There is a dedicated video for that. I will link to it here. Okay, let's move on. 13.1. 13.1. Okay, let's continue. Let's see if we have a pullback. No, we don't. We're still with the same pullback. There is no other pullback. Now, this is interesting, and this is something I'm now testing. Okay, this is a rejection zone. What I'm trying to find out, if there is a way to use this, okay, with something called a volume zone. In the early videos, I talked about it. I will link to that early video about volume zones for you who are interested, because I'm looking at if there is a way to identify that now we are going up, and I want to see if I can use this instead of just waiting for it to hit. Do I have an indication that it might go up and hit it so that I can make use of this range, and I can take a trade on it? Okay. Normally with this kind of rejection, we might assume that yes, we will go up and hit that inducement. Now, the inducement, as we said before, it's a liquidity area, and it seems to be heading into that direction now. Yes. See, it got hit. Now we have a confirmed low here. And now, because of that, we have the low of the trading range. Now, since we have the low of the trading range and the inducement has been hit, we can now look at the points of interest, or the entry potential points. The low is 23.52.1, 52. 23.52.1. Okay, so this is the low of the range. Let's see the range now. Where is it? Okay, let's see this. Where does it end? It ends, let's take it to 550. Okay, and let's take this range. Let's change its color. Oh, yes, this is the one. To 550. Okay. Now, the original methodology by the guy that I got this plan from, or this methodology from, talks about different points of interest. He talks first, he looks at order flows. An order flow is, in this case, we are bearish, so we are looking at the move up before the move down. So this is an order flow, but it should not be mitigated. So he looks at all this range, all this area, and stops here. He does not look for them below the inducement, because anything below the inducement is a move towards the inducement, and it's a money trap. And all of this is from what I learned from him. Okay, so this and as I said, I linked to him in the first part of talking about the system, which is titled identifying the trading range. Okay, so this is an order flow, this is an all mitigated. Now, I don't look for that. And okay, he looks at all this range, but then he deletes all the ones in the middle. So let's say he found an order flow here, an order flow here, an order flow here. Okay, so let's say, yes, this is an order flow that is not mitigated. This is an order flow that is not mitigated. This is an order flow that is not mitigated. Okay, but he deletes the ones in the middle. He keeps the closest one to the inducement and the most extreme one. He calls this is the extreme POI and this is the decisional POI. In his way, and I'm not going to explain what he explained. You can go to his channel and look for the details. Um, the decisional is 50-50. The extreme is the one with the most probability of success. So what I did is that I ignored all this noise. I'm not going to try this and try that. Then he moves from the order flow. If he did not find an unmitigated order flow, he moves to order blocks, and the order block is within the order flow a gap that is not mitigated. So for example, this candle has a gap towards this, but is it mitigated? Yes, it is mitigated by this candle. Okay, this or to me, what I do is I just look for a candle with a gap that is not mitigated. Okay, I don't look for them just within an order flow. This is one. Two, it needs to be as close as possible to the limit, to the range. In this case, where we have a bearish range, I look at the closest POI to the higher range, to the top range. Okay? So in this case, what I will do, I will look for, so this order flow is mitigated. Yes, this is mitigated by this. And this is mitigated by this. Okay? So if they're all mitigated, that leaves this candle that is not mitigated. This candle. This one is mitigated. So that leaves this candle is the closest one. Okay, so this is the order block, and also the order flow is not mitigated. But since it's so far away from the top range, I will only take the order block. There is another way. There is something, remember the rejection that we talked about here, the rejection area? Where is it? Yes, here. If there was a rejection area here, and there is, okay, and with the way I take it, whether it is mitigated or not, I take it. Okay, so this is the order block. From the high 2542 to the bottom, which is 25.36.5. Okay, so this is an order block, and this is the color that I give the order block. Okay, let's, this is 2, this is 5. Okay, now what I do, if this is what I'm going to take, this is a sell order. The concept here is that this is a liquidity area. So it might just take this liquidity here and go down. Okay. But this is another liquidity area. And it might just ignore it and move back. But it seems to be, because this is a sweep, it might just be satisfied with it and go down. If it is not satisfied, it will go to another liquidity and another liquidity and another and another. Okay. And from those liquidities, it will support the theory. It will support its move to go down and break the lower range. Okay? Or all of this will not be the case, and it will just break this, and it will be a change of character. Now, there is another thing that we need to make sure of, which is this a major or a minor inducement? We talked about that in the last video. Since the inducement has been hit after this break, then it is a major. If it was before, then it is minor, and I will ignore the range and wait for another range. I will not take a trade with a minor inducement. Why? Because when this is a minor inducement, what becomes the major inducement is the top range, is the top of the range. That means the liquidity here is a target. Okay. So now we will see if we are able to take this. What happened? What did I take? I don't know. Okay, so this is the short. Okay. Now, the origin of this is to have the stop loss exactly at the top limit. What I do is, since this is a liquidity area as well, I just put it a little bit above, but it will depend on, this is very far away. So let's see. Now we will, once we get done with this advertising thingy, we will see if our risk management rules allow us to take this trade, because we need to have our risk management, we need to be disciplined to our risk management rules. Okay, so we have a couple of seconds. Okay, now let's close it, and the take profit is at the low of the range, and as we said, the theory is that it will go down and move and continue its movement downward. Okay, and therefore a new trading range. So now This low is 23.52.1. So the TP is 52.1. And the entry is at, should be at 36.5. It's at 36.6. Now let's look at the SL distance. The SL distance is 342. That means it's 34.2 pips. Okay. Let's go to our calculator and see if we can take this trade. Okay. So GBP USD and 1000 and 34.2 and 0.5%, 0.5, calculate. So it's 1 micro point something. We cannot go, there is nothing less than 1 micro. So we cannot go and open on our platform less than 1 micro. So it's either 1 micro and our risk will be less than 0.5%, or move it to 2 micros and we'll see how much we will be risking. My risk management rules say, because of this factor, I have done a range where my risk per trade is between 0.5 and 1%, between 0.5% and 1%. But actually, when I normally, if the trade is dictating that I would be 0.8, 0.9, or even 1%, I don't take that trade, really, even if my range accepts it. So now let's see what is the trading, what is the risk that will allow us to take 2 micros. Uh, okay, 7. Okay, it's less than 7. It's 6.9, 6.7, 6.75. Hmm. 6.8. 2. Yet. 3. Yeah. So my risk is 0.683%, which is about $6 from the 6.83 from the 1000. Okay. To me, this is acceptable. It is still between, it is up, it is still near to the 0.5%. And I will go with the 2 micros. Okay. So let's go back. Okay. And now let's open a position and see what it will do. I really don't know. I haven't done this. Well, I did test it, but I forgot what the results are. So I'm seeing this exact with you. So I really don't know. I did not prepare this before. So we open a position, and now you'll see how this position. Okay, I will show you something. Cancel. When this is clicked and you go to the open position, it will take the info right away. So now remember that our risk is 0.683. It can take only 6.8. It does not allow us to put another one. So it's 6.8. It is sell, it is limit. Yes. Okay. And from the current balance. although this is the first one, but I always take the current balance, not the initial balance. Save. Okay, so now we have our position open. So this is a pending order. So I go to sleep. That's it. Once this is done, I move to another pair. But for our, because we want to see what will happen, so let's go. See it, well, it, okay, it broke it. It broke the inducement and it's going up, but still resisting to go. Let's take it this way. There is still resistance and it's still kind of ranging. It's going up. Okay, so it took the order from here. Okay, but as we can see, this is our order block. It broke the order block, so this is dangerous now. Okay, it did not respect the order block. It even it didn't see it. Okay, it didn't see it at all. So most probably this one. Wow. Okay, so we have a movement here. What is the reason for this movement? It's not the rejection area. It didn't even go there. Hmm. Is it a support area? A resistance area? It could be a resistance area here. Okay, from this to this level. But let's see, because those are really big candles. Those are big candles. Okay, we have a rejection zone here happened and it is going up. It's not breaking the lows. It is still dangerous and it's approaching another time the okay, it lost. And this is how it goes. Now, in the next video, I will tell you my experience with the testing. I back tested this and I played a demo from the 18th of August 2025 until, I'm not sure until when, but until the end, late September, 29, 28, something like that. Okay. And I stopped because I'm working on something else. I'm working on something else in both trading and, I have been, in my description, I've been talking about I'm learning blogging as well. And this is part of my blogging experience, all these videos and blogs. I'm documenting all this and I'm learning blogging at the same time. I like to learn new things and I'm enjoying the AI part of the story. So, in the next video, I will tell you my results of the testing from the 18th of August till the end of September, and the win lose ratio that I've been experiencing, and what I'm going to do about it. Okay, so as not to get this video too long, thank you very much, and see you in the next video. Bye bye.